Joining me on the program now, Andy Milne. Andy, kia ora, good morning.
Good day, Andrew. Great to be with
I'm
you.
sure you don't have relatives you don't like, and they.
Absolutely not, Andrew. Perish the thought.
However, the OCR announcement. This is a little bit of Santa Claus handing out the lollies. Bit of a lolly scramble, perhaps. And we've got a new Reserve Bank governor as well. This is historic. This is unprecedented. Not only is she a woman, but she's from Northern Europe.
That's right. So the Reserve Bank has announced that Dr. Anna Brenner from Sweden will be taking up a 5-year term, starting I think 2nd of December.
Okay.
So she won't be around to manage next week's announcement, but come the new year, she'll be in the hot seat. Comes very highly regarded, understood to she's quoted as going to have a quote unquote laser focus on price stability. So talk of keeping inflation under control seems to be very much the main game.
No, and hey, that seems like great news indeed. Now, as she won't be involved with the OCR announcement next week, but I'm sure she'll take an interest, and then she sort of picks up the bat after that and moving forward. Now, it just seems like recently that the main banks have shaken down reduced interest rates from the last OCR announcement, and there's another one on the horizon. So a little bit of more extra pressure for the banks to go even lower before Christmas. Does that seem likely? What are the indicators on this one, Andy?
Yeah, quite likely. So we talked a couple of weeks ago, Andrew, about recent GDP numbers, which painted a pretty stark figure. The drop was something like 0.9% in GDP, which doesn't sound huge, but when you're talking about an economy with billions and billions of dollars,
That's a big.
they're still quite big numbers.
Yeah.
And the real effect in the economy, has been quite well felt. I guess, if you look, you don't have to look too far into the headlines to see stories about record numbers of business liquidations
Yeah.
that have, come under pressure, mostly from the IRD collecting unpaid taxes. But you've seen some large business closures as well. Recently we've seen Smith and Coe's close. We've seen Smith City, particularly in the south, big in the South Island, shut their doors. The regions have been pretty badly hit too. Nelson Tasman have had, several large employers shut down or relocate. Tokoroa just recently, big impact in their timber milling and paper production industries. So, people are doing it tough out there, and I think that's been reflected in business confidence surveys. Still fairly neutral. There are green shoots around, but people are still nervous about what the future may hold. So there's been talk, and as we said, it's easy to be wise in hindsight, but there's a lot of talk that the Reserve Bank probably didn't cut rates early enough or deep enough. And it sounds like we're going to have a bit of a correction this time. The market is really leaning pretty heavily on a bet towards a 50-point OCR reduction. That's
Wow.
going to take the official cash rate down to 2.5%. Lowest it's been in some years. So, that's hopefully going to have a stimulatory effect on the economy. It's going to mean lower borrowing rates, for homeowners, for businesses, and hopefully that's going to translate into increased, retail confidence, and retail spending in time for Christmas.
And hey, the timing is important on this one because, I mean, the announcement will be, nearly mid-October by the time this comes out. And there is a bit of a lag. Okay, the announcement is expected, and I know some of the banks, they anticipate and preload some of the cuts there if they think it's going to go a certain way. But will we get the reaction time? Will we be able to get enough of a boost in the economy before Christmas? Because Christmas spending and a generally more positive outlook and the cost of borrowing going down, that all, throws a bit of petrol on the fire, as it were. But yeah, for some businesses, as you mentioned, this is a little bit too little too late. Will the timing of it give the economy the boost it needs before Christmas, do you think?
Well, there's a good chance that it will. I mean, I guess one comment I'd make is that, as we've seen, the banks have already started to move. So the banks have already anticipated next week's move and they've started moving their fixed rates down for home lending. Now, of course, and we've talked about this many times, Andrew, that New Zealanders, we love a good fixed rate, and a lot of our so it will take time for some of those rates to really filter through to change in people's back pockets.
Mm-hmm.
But historically, spring, sort of September through to November, December, historically is a large is a popular time for a large number of mortgages to roll over.
Yep.
Through in that spring summer surge in property sales. So there's a very good chance that it will come at a good time for homeowners. So there will be a lag that these latest cuts aren't going to be fully felt probably into the new year.
Mm-hmm.
But I think it's fair to expect there will be a bit of a sugar hit in time for Christmas.
A boost in the housing market, as you say, with lower interest rates, a boost in retail spending. So a little bit of a smile on our face before we head to the big Kiwi shutdown in January, right?
That's absolutely right. Fingers crossed, Andrew.
Hey, appreciate the work that you guys do at Christian Savings. Of course, christiansavings.co.nz for more information about investing and building the kingdom of God. Andy, thanks for joining us on the program today.
Thanks, Andrew. Pleasure.
Hey, thanks very much for joining us in the Rhema studio. Thanks very much for watching the interview. It's kind of nice to have an audience, actually. And if you did like what you watched, then do give us a like, do give us the thumbs up. And if you'd like to see more interviews like that one, or perhaps even better, subscribe and those interviews will come straight to you. Don't forget to turn on your notifications, and we'll see you in the next one. Cheers.